Hi there, welcome to Nepi Invest. I can't not talk about Myer. This company was much maligned for the longest time up until recently, but all of a sudden there's been a lot of positive sentiment on Myer, and that has led to the share price rallying. And the very fact that the company released a pretty positive trading update on the 24th of January hasn't really hurt things. In fact, the share price right now is approaching $1. But I would be wary not only on Myer, but any other retail company whose share price are moving back into an uptrend. I think there is pain for this sector over the next few years because all these tailwinds these companies have been in during the past few years will be coming to an end. I think a lot of people thought it had come to an end within the last year, but it seems like the Australian public just wants to spend a little bit more right now before they feel the pain in 2023, even into 2024. So a lot of these retail companies have had a really magical few months, and I think that magic soon will be coming to an end. One of the reasons that led to this shift in sentiment in Myer was just some positiveness in the company's trading updates. They released one on the 24th of January, and this was quite positive. Total sales up 25% on compared to the previous corresponding period. Store sales up 38%, but group online sales down 9%. Now, they also gave some guidance in regards to the first half of financial year 23 profit after tax, and they expect that to be between 61 and 66 million, up between 89 and 104% over the first half of last year, or between 54 and 67% higher than the first half of financial year 20, which was pre-COVID. So the very fact that the sales are significantly higher than pre-COVID should give us an idea that these sort of companies, particularly Myer, which is a dying company, a very slowly dying company, should give us an idea that these companies have faced significant tailwinds and they have benefited from these significant tailwinds. Not only that, the commentary from the CEO was quite positive, expecting these tailwinds to continue for the foreseeable future. Now, he did say there's still a lot of uncertainty out there, but I think he's being a little bit too positive because, in my opinion, particularly with this mortgage cliff, we're going to be falling off during the year with a lot of fixed rates moving into flexible. We are going to see a dry up in retail spending. If we don't see retail spending come down, that means the Reserve Bank put up interest rates for no reason at all. The whole reason they've been putting up interest rates is to curb retail spending. So at this point in time, it doesn't look like the raising of interest rates is working. So no doubt the Central Bank of Australia, the Reserve Bank of Australia, is feeling a little bit nervous about these particular retail numbers that Myer and other retail companies have given the market over the past month or so. Now onto the weekly chart for Myer. This goes back to 2011 when, or just after they were spun out of Coles Myer. Forget exactly when that happened. But there's always been negative sentiment behind this company, and that negative sentiment has driven the share price of Myer down from above $3 to a low of about 12 cents, even 10 cents during the COVID-19 financial panic. There's always been talk about this company dying eventually, and I think the business model for Myer is not a sustainable business model for the long run. It's sort of one of those companies that will be profitable for a certain amount of time, but eventually this company won't exist. So you're always going to see, for even these dying companies, periods of time when there is positive sentiment. And right now, we're in one of those period times where there is positive sentiment behind this company. For some reason, there's a lot of investors out there really excited about this company. And that excitement, that positive sentiment has really driven the share price higher, not only over the past month, but over the past 6 months. In fact, from June, where the share price was about 30 cents, the share price has more than tripled during that time period. In fact, the last 2 weeks, the share price has risen from about 65 cents to a current share price of 97 cents. And when we look at the trading history for this company over the past 10 trading days, we have seen the share price continually going higher on each successive trading day, apart from one, which was the 17th of January. So these are the trading days since the 16th of January, up 8.6%, down 0.7%, up 2.7%, up 3.9, up 1.9, up 4.3, up 5.3, up 5.6, up 2.7%. So that is last 7 days where we have seen the share price of this company up. And that sort of rise in the share price on the back of positive sentiment, I don't think will last too long for this company. And even now, I just looked at the valuation, and I would say this company is starting to look overvalued. So I do think you have to be wary not only for Myer, but also other retail companies that have risen significantly over the past few months on the back of positive retail data. And I think there is a possibility during this year we're going to see those retail numbers come back a fair bit as people start curbing their spending. And of course, there's also the scenario where people don't curb their spending, and that is probably the worst case scenario for the Reserve Bank, because that would mean their raising of interest rates was a complete waste of time. They really didn't have to do it. The whole reason why they're raising interest rates again is to curb spending. They want us to spend less because they believe that if we spend less, that would put a lid on inflation. So they must be a little bit nervous now about these retail numbers. And if people keep on spending, that could keep inflation higher longer than they expect. Now, in saying all that, I would not put any trust or faith in what the Reserve Bank thinks is going to happen over the next year. They are always wrong, and they will continue to be always wrong. So just like anyone out there who's trying to do economic forecast, I think trying to do economic forecast is just a simple waste of time. So if you totally disagree with me about Myer, or you disagree with me about economic forecast being a waste of time, I'd love to hear your thoughts, your opinions. So leave it in the comment section of this video. Otherwise, that's all I have to say in this video. And I should say one more thing. I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.